So Mikko, what's your take on the property space, particularly on the business side of it or on businesses?
Just to share about the office market, in Q1, we've seen 157,000 square meters of office demand. That was 44% less from last year, but I don't think we need to panic. As the demand has been reduced, we've also seen a reduction of supply in terms of many developers have now earmarked their buildings to be pushed to 2021. And what that does is it curbs the supply pipeline. And, given the demand that we see in the market and the supply, I think we can avoid any oversupply in 2020.
Okay guys, in this video, let's talk about property investing and also if you own property stocks, what's the impact of this lockdown, this coronavirus pandemic to all of you guys, especially for those who have cash. What are you supposed to do if you own property or you own property stocks? What should be your technique and narrative? We have Mikko Barranda from Leechiu Property to talk about what's going on, particularly in office spaces. So Mikko, welcome to the video.
Good evening, everyone. Thank you for giving us this opportunity to share about the office market. But, first and foremost, I just want to acknowledge Marvin for it's been difficult for 5 weeks because of the lockdown. But, with all the content and the videos that you've been producing has really been helpful for me personally, and I'm sure been very helpful for a lot of people, especially when it comes to making the right decisions in terms of investing and really just the relevant data that many of your speakers provided in the videos. So I'm really thankful, and I'll always continue to patronize your
thank you. It's nice to know that super rich people watch the vlog. So you have some slides. You have some slides to show us. Okay, let's start. While Mikko is loading that, he's gonna talk about the office spaces, and as you all know, since we're on lockdown, people have been asking and they're concerned about the property sector, and that's what we're gonna drill in. No? So if you guys have any questions from anything that Mikko is presenting, feel free to leave them in the comment section, and then we'll try to see how we can address those questions. Okay, Mikko, it's all yours.
Alright, sige, salamat. So we just prepared a few slides here to talk about what's happening in the office market, especially now with COVID and the lockdowns. So we'll show you a few slides showing the supply and demand, what we think is happening in the market, and what our forecast would be. Especially the demand drivers, as you know, the BPOs and the online gaming, will they continue to expand beyond the lockdown? So those are things that we can tackle in the next few slides. So I'll just start by sharing this first slide with you. The last 2 years have been very good in terms of the office market for us. Last year, we clocked in close to about 1.7 million square meters of office space demand. So to put that in perspective, the Philippines is now one of the largest markets in terms of volume of office demand. So we're the fourth, just behind China, Shanghai, Beijing, and maybe Mumbai. So we've done really great in terms of demand in the office market in the last 2 years. But most of those highlights have been overshadowed with what's happening in the market today. And in the last 3 months, all the challenges and all the events that have happened, including, of course, the pandemic today, has been very, difficult for the office sector. However, I think we still need to be optimistic. There's still a lot of good things happening in the market. One of which is the infrastructure projects that we've been tracking very closely. So if I'm not mistaken, we have about 150 kilometers of road and bridges that are going to be built in the next 2 years. And of course, there will be some delays, but those projects have been, some of them have already started, and it's just about finishing those projects. What that will do is really unlock a lot of human capital in the economy. So if before, let's say it takes me an hour or 2 hours to get to the office, that will be cut down in an hour. And for many people, it takes longer. So just the efficiency and the productivity of having those infra projects will be a really big deal in the next few years. Second is the BPO industry. As many of you know, that this is one of not the largest employer in the Philippines. So BPO industry started back in 2001 with maybe 1,000 people. And today they have 1.4 million full-time employees, so they're the largest employer in the Philippines. What we see is that given the fact that many countries are now going to recession, especially in the US, many companies will start to protect their bottom line even more. And one of the ways they can do that is really outsourcing more work in countries like the Philippines and India. But at least for the Philippines, we have a 20-year track record. We have been able to really build the momentum that we have scalable labor. Before it was just Metro Manila, now we have so many other places in the Philippines that a lot of the BPOs have expanded to, whether it be in the Visayas region, you have Cebu, then you have Iloilo, you have Apollo, then you have in Mindanao. So, and Clark, especially Clark, that we believe will be the next Cebu. Third is, very controversial, I know, is the POGO sector. But in just 4 years, the POGO sector, I think last year, they've overtaken the BPO sector in terms of the largest demand driver in the Philippines. And they've done that in a 4-year period. So they've grown 11 times in the last 4 years in terms of the space they take in both the office and in the residential sector. Then, of course, foreign ownership, we've seen that they're being a little bit more lax when it comes to that. Very interesting also is that, in last January, when we saw that Wuhan, China was on a lockdown, a lot of companies were looking at where they can outsource work, Chinese, and they needed Chinese-speaking labor pool to be able to service a lot of these companies. And the low-hanging fruit was the Philippines because we had all these POGO Chinese companies here, and they were able to absorb a lot of the work that when China was shut down, and we'll be able to operate from here. So we see that trend continuing in terms of us being another source of demand for Chinese companies for multinational. Global stimulus, as you're very familiar, Marvin, in the US, it's pumping so much money into the economy. And the REIT sector, which many of us have been very hopeful that it was supposed to be this year with Ayala. We've been waiting for 12 years or 11 years since the REIT Act was passed in 2001. And many of the challenges actually have already been resolved, whether it be taxation through the train law and whether it be the minimum public ownership. So we're in at least a lot of these challenges have been resolved. So it's a matter of just wait on when these developers will again start to continue and be active in the REIT. But the Philippines is one of the largest markets in terms of office space and mall space. So we have about 26 million square meters of assets that are REITable, which will really give us a long runway when it comes to the REIT. So we're a big believer of that. Just to deep dive into the office market. So in the first quarter of 2020, we saw 157,000 square meters of transaction. At least it wasn't zero, and but it was a big drop from last year's number, about 47%. But what we do in Leechiu also is we day in day out we try to be as accurate as possible. So we track all the active accounts that are in the market looking for space. So as of the moment, there are still 600,000 square meters of demand, or at least companies that wanna expand or relocate or move into a new office. And that 600,000 plus the 157,000 in Q1 will give us around 800,000 square meters of demand, at least forecasted this year. That's 50% of what we've done last year at 1.7. But also the funny thing about this virus is that it did slow demand, but it also slowed supply. So due to the lockdown that we're now in the 5th week, we've seen that many developers that earmarked to finish their projects this year have now moved another 4 to 8 months. So supply that was supposed to finish this year was 1.5, and now we're down to 800,000. So given that we have 800,000 for demand and another 800,000 for supply, luckily that if the data will really support itself, then we can avoid any oversupply in the market, at least for this year. But I guess the caveat there is also, we need to be very prudent in really tracking all these accounts, and it's very difficult, especially how lockdowns now have every 2 weeks they announce that it's another lockdown. So if this prolongs to the next few months, then it will be also a very different story. What we've done here is really just put it into a graph to show you what we were saying in the previous slide. So in 2019, the green bar line that you see above, the broken bar, is the demand in 2019. And the new demand is the one in the middle, which is 800,000. So if you also look at the blue line, which shows you the annual supply of office space from 1.5, and the orange is the readjusted supply, which has been reduced by 44% to 842, which shows us that we will avoid any oversupply in the market by 2020, but it will spike in 2021, and hopefully by that time we're able to ramp up demand. Just a breakdown of that 636,000 square meters which we mentioned earlier. So most of those are in the IT BPO industry. So we've still seen the BPO sector expand their footprint in Metro Manila and in the provinces. POGOs are still looking for space, or at least they want to be able to finalize the leases after the lockdown. But interesting enough, in the past 4 years, as we've seen the POGO and BPO sector grow, we've also seen the others grow. So others are other brick and mortar businesses, traditional businesses, and most of them also support a lot of the IT BPM and POGO sector. So where 10 years ago we were one-legged economy and we were just heavily reliant on the BPO, now we have at least it's more diversified in terms of having BPO, POGO, and the others expanding as well. A very busy slide here, but basically what we're trying to say is, we believe that the BPO industry will continue to expand. In a cost-saving perspective, we're still a tenth of the price compared to the US. But it will be very difficult for them to expand if we don't have enough PEZA spaces. So PEZA is one of the requirements that is necessary for them to be able to operate in a building, for them to enjoy benefits, whether it be income tax holidays, so on and so forth. But in the last 2 years, the government has mandated that they will only grant PEZA buildings or properties in the provinces. But the challenge is not a lot of provinces also have the real estate available. So as much as a lot of these BPOs want to expand in these provinces, they may not have the real estate available, or most of the developers there are not speculative. They'll only build when someone commits, or the number one factor for BPOs is really labor. If they can find that's one of the reasons why Cebu grew to as a nice BPO hub, is because they had the labor capability to scale their operations. So what we're trying to say is, in the next in 2021, we'll only see 32,000 square meters of PEZA space in the market. And if we predict that BPOs will grow by 400, 500,000 square meters every year, that won't be enough to support them. It's always very controversial to talk about the POGO, but at least from our sense is, we have to also look at what they brought in the economy. It's about managing really the sector to be able to collect the right taxes, so that they don't do anything illegal. And we have to also continue to look into our officials to be able to implement that. But very interesting enough, in 2017, when there was a little bit of a slowdown in the BPO sector, and there weren't that much PEZA spaces available, the POGO sector really gave enough. Was expanding to really save us from any oversupply. And if you just look at the numbers of contribution that they in terms of taxes, in terms of office space, it's undisputed, and I think we also really have to look at it as a benefactor to where we are now. Again, what we're saying is that the BPO sector will continue to grow and be the largest office occupier in the Philippines. We've seen that in past recessions. We've seen that in the 2008 global financial crisis. Many of these US companies started to outsource more work to the Philippines and really reduce their headcount in the US to protect their bottom line. When the travel ban gets lifted, we'll see POGO demand start again, or at least they'll look at taking space in the market, not only Metro Manila, but also in some parts of the province. And, the REIT law will be something that I think we can all look forward to. Ayala was on their way to listing their REIT. And at least even as an investor, I know, when can I really own an Ayala asset or an Ayala building? And I'm looking forward to that opportunity to buy property, these properties when the property firms start to list their building.
If you're a stock market investor, always think about who are the property development companies connected to that, because if that's the underlying theme over the next few years, the companies that are positioning towards that will somehow benefit, or if all things get worse also, the ones that are positioned in that will also somehow not have any growth. And the technique there is, if you are a person also who wants to earn off rentals, so you position close to those offices, close to those businesses, because there will be people who will be working there. And of course, because it's still traffic in Metro Manila, when all of this is over, the traffic will come back. And a lot of them would want still to have close proximity to their offices. So those are the things that you could also analyze if you are investing there. Anyways, I have a couple of questions on top of that. You mentioned that this is all predicated on the lockdown. What if the lockdown lifts, but we still don't go back to normal, meaning it will still be selective? There will be, since Metro Manila is one of the most hit, and a lot of the businesses are still here, how does it impact the demand and rental for it? So, for example, we don't have a cure yet or a vaccine in the next 9 months, and things don't go back to normal yet.
Definitely, when they lift it, it will be a modified ECQ, and it will take time for people to really go back to their offices. And you know, I think it will take longer until we find a vaccine where we go back to really how things were before. So there will be an adaptive normal. I believe that some people will continue working from home if they can. But again, just pointing out that work from home, as much as we want everyone to be able to adapt to it, the reality is not a lot of people have the environment conducive enough for them to be productive, especially on the BPO sector. So, you know, a lot of the BPO sector clients that they have are either healthcare or finance. And a lot of the financial clients, whether they be banks or a lot of these big multinational companies, will have very strict data privacy laws. I mean, when they were operating their BPOs, some of them weren't even allowed to bring their phones in the office, or they have to leave it in the locker. So imagine a lot of these companies will still not allow their employees to work from home, with giving that risk whether the information is in their laptop and their laptop is stolen. So that's one. So we believe that at least on the BPO sector point of view, they will still continue to grow, because some of them will not be able to really adopt that type. But some would. I think we also have to be open to that fact. Second is the social distancing will affect everyone, as mentioned earlier. So many companies in the Philippines are following a very low density. So in the US, for example, they use what 1:10 density. So for one person, it's equal to 10 square meters. In the Philippines, for BPOs, they use 1:6. So for every one person, you have 6 square meters. In a traditional office, like an insurance or maybe a legal office, will use 1:8. So let's use 1:8 as a example. What that means is, once the government insists that we need to do social distancing in all buildings, many buildings won't be able to operate in full capacity as much as they want. Let's say a 100,000 square meter building will only be able to operate 40,000 square meters. So a lot of these employees will either work from home, but those that can't will need to find a solution, whether it be doing a short-term lease to a lot of swing space providers, until such time that, you know, we get back to the normal, where we were before, and go back to the office. Or actually the demand might even increase more. But of course, that's a play on also them willing to spend capital and capex. So maybe a lot of them will do a swing space option in terms of flexibility of lease, and without giving much of in terms of them having to spend any capital. That's why we need to be very mindful that we know what's happening every day, every single day, and see how the demand changes. If, let's say, a few tenants say, you know, they won't be expanding, then we cut that 600,000. And also, whether new accounts coming in, we also include it in that pool of demand.
Top of your head, do you remember the property developers with the largest exposure to BPO and POGO? At least a top 2 or 3, so people know what to look for.
Yep. We have Ayala. So if you just looked at, you know, Metro Manila before, it just used to be Ortigas, Makati, and maybe Ortigas and Makati for the longest time. And when the BPO industry started in 2001, we've seen business districts grow across Metro Manila called IT parks, right? So Eastwood was the first IT park, which was really built purposefully to support a 24 by 7 call center, whether it be on a retail perspective, on a residential perspective. So today, if I'm not mistaken, we have 60 business parks or IT parks in Metro Manila. You have Araneta, you have UP Techno Hub, you have Vertis North, you have Bonifacio, of course. And a lot of these developers like Ayala built IT parks to really support the BPO industry. Similarly, you also have SM, which has the big Mall of Asia area. The Ecom buildings are all 85% BPO. So they were able to get the land PEZA accredited. So any building that they erect will already be PEZA, as long as it's more of a formality. In terms of POGO, you just need to follow where the POGOs have been going. And the first location that they have really aggressively expanded is the Bay Area. And the biggest players in the Bay Area would be, you have the Double Dragon, you have Asiana, with the Wenceslao by one of the companies that have reclaimed land in the Bay. You have SM, you have Philinvest. So many of these developers, even boutique developers in the Bay, have been enjoying rents 40% what it was above market. And outside of the Bay Area, they've looked at Alabang, they looked at Makati. And now, due to the fact that they have expanded aggressively and diminished the supply in most of these areas, they now look into other parts of Metro Manila. But what we need to be mindful of is that POGOs will need approval from the local government. So they will need what you call a letter of no objection from the LGU to say, you can operate in my city. And then I think at this point in time, not all LGUs are still warming up.
Why did everything start in the Bay Area? What was the bias there? Why did they build all of those POGOs there when everything started?
The casinos being there is one of the low-hanging fruits in terms of allowing that type of business to operate. Second is the LGU has allowed them to do that. Number 3 is the proximity to the airport. Since they get a lot of visitors in and out. Because most of the staff that are being hired are from the mainland. But of course, they also have Filipinos in these offices. What people think is it's 100% Chinese, but you still have 10, 15, 20% that are Filipinos also helping out in other ways. And if you just look at 3-4 years ago, some of the buildings in the Bay Area were built purposefully for BPO. So that's the trend that those are the type of locators that they wanted to attract. But not a lot of them were able to get their PEZA. So without PEZA, it would be very, very difficult for them to attract these tenants to sign up. So some of these developers waited for a while until they are able to get PEZA or get locators to sign up. But eventually, when the POGO started knocking on their doors and saying, we'll pay you 12 months of rent, we'll pay you 40% above market, then it was very difficult for them to be left in an empty building. It's a choice whether being left in an empty building or having a tenant that's already knocking on your doors.
You mentioned about 40%, no? Was that on purpose? I'm sure the Chinese have researched the prices here. Did they intentionally really give it 40%, or everyone just jacked up their prices?
I would think it's even more today. The last transaction in the Bay is probably 1,600 pesos per square meter. So that's the most expensive office space in the whole of Metro Manila. To put that in perspective, Bonifacio office space, grade A, it's at 1,400 to 1,500 per square meter. Makati, a very fragmented market because you have buildings in Legazpi that are old, you have new buildings in Ayala, but the grade A buildings there are fetching 1,500, 1,600. But the Bay has done 1,600 to 1,800, but that was also in progression, but in a very fast-paced manner. So many of the developers initially, given the fact that they weren't too sure also of having these tenants, were also sort of saying, we'll put it at this price, we'll allow you. And at these many deposits, then we can protect ourselves in case that, we disappear tomorrow. We'll have enough 6 months or 8 months to find a new tenant. So as developers started to accommodate them, and people had visibility on what the prices were, it just was a snowball effect. And in terms of even as far as developers, POGO operators bidding for developed spaces, because the supply in the last at least 8 months was very, very tight in terms of available office space today. Because there are pipeline, but for them, they need the space today. That's the difference. They're not one to wait that long. Also,
you mentioned in your slides that after the lockdown, the usage of POGO, again, the operations of POGO will continue as normal. So you don't see any threat in terms of their operations here in the foreseeable future. Because that's one of the biggest questions that people are asking. Even in the residential space, people are buying condos now catered to hopefully Chinese tenants will rent their units for their employees or for the Chinese employees as well.
We've been talking to a lot of the operators, especially the big operators, and the sentiment in the market is, right now they can't operate because they're not non-essential services as given by the guidelines of the IATF. But what was really difficult for them was the lockdown. That was really where their operations contracted. So in the earlier months, I think when we weren't in lockdown yet, but flights in China have stopped, and many of those flights can't go to Manila in the Philippines. They've been able to outsource labor from different also parts of Asia. So they were able to source it from Vietnam, from Myanmar, so on and so forth. But again, it's hard to give you a definite yes or no whether they will keep on expanding. But at least what we try to do is, have that conversation and dialogue with our clients. And at least from what they've been saying to us, that there's still some activity happening. Maybe they won't take as much space as they've done last year. And I think they will definitely be more prudent. But it's we believe that they will be here to stay and they won't just disappear overnight.
With that also, you mentioned a bit about the supply and supply and demand dictates prices. Given that if they won't be as aggressive, do we see property prices increasing, or it would just stabilize? Because the past few years have been crazy, both office and residential. The appreciation has been crazy, but because of what's happening, how do you see its growth over the next at least 1 or 2 years?
You also have to take it on a per district basis. If you look at Makati and Bonifacio, we don't see any contraction of prices as much. The demand in Bonifacio and Makati are corporate demand and BPO demand. And if you look at Makati itself, there are very few buildings coming up. There's actually just 3 Ayala buildings, and Makati has already exhausted in terms of supply. Bonifacio has now produced, Bonifacio is probably a third the size of Makati, and in the next 2 years, you'll barely see any new office buildings in Bonifacio. 2 and 3 years. So Bonifacio will have been fully developed. I had the money, I'd look at Bonifacio, definitely, because of the scarcity of it. You might not see the scarcity today, but the scarcity is coming in the next few years, just because of the size of Bonifacio isn't actually that big. I mean, it's part of the league, but Bonifacio Global City itself is just a third of it. Other districts might be in a very difficult position. If you look at the Ortigas CBD market, there are 6 or 7 new office buildings there, and many of those office buildings were not able to get PESA. They will have difficulty filling up those buildings, and there might be some. I wouldn't say prices will contract. Definitely, it won't be that simple. But maybe when negotiations start to happen, some developers might be a little bit more flexible on what they can offer. But headline rates, I believe, will retain at at least as early as now, we haven't seen much movement in terms of them changing.
Since a lot of the businesses that are considered non-essential are not operating, meaning they're not getting revenue, sales are most likely zero. A lot of those businesses have loans also. Given that some of them might not survive or might not make it over the next few months, do you see a problem in terms of if they close down, how does it impact the property space as well? I think it's early. It's still too early to tell naman on how they will survive. But do you think there's a risk there that there's a big chunk of, especially the smaller offices that are renting, should they close down, will it be a big impact in the property rental space?
It definitely is too early to tell whether that will happen. So a lot of tenants now are trying to also reduce as much operational expense as they can. And a lot of that is a big chunk of that is rent. So many of these tenants are starting to have conversations and dialogue with their landlords and developers to see on how they can bridge that gap of not being able to operate and how we can be able to, if there are any concessions that can be extended. So I think, especially when it comes to MSMEs and SMEs, I think very important is to really stay updated. Because if you just look at the government, they've been releasing several DTI guidelines in the past few weeks. And many of these guidelines are actually very helpful, I'd say, to MSMEs in terms of rental concessions. There was a particular guideline, DTI 2012, if I'm not mistaken, which says that if you are an MSME, and an MSME is a company with assets below 100 million, you'll be able to defer your rent and pay that in installments in the next 6 months. So that really helps that in terms of cash flow for MSMEs. And second is have that dialogue with your developers or your landlords on what concessions can be provided. But also, you know, as I was telling you earlier, is that we also looked at it everyone is affected. You know, as a tenant unable to operate, developers are also affected themselves, especially those that have loans that they need to pay. They have a mortgage that that they have to pay, and it's finding that win-win situation from both parties.
We talked about a lot about what's gonna happen based on supply and demand and the data. Just to wrap everything up, any final words for property investors and stock investors who are invested in property stocks, or at least aiming to invest in property stocks? Siguro you can also add, should they be concerned, or is it something that everything will also be weathered down?
There are buyers actually in the market, and there are sellers in the market. Although a number of these sellers, they want to sell on pre-COVID prices, and a lot of these buyers want to buy post-COVID crisis. So it's at least I think we're in that point yet that we haven't seen in terms of even given that the banks have also deferred a lot of mortgages, we don't have that much. At least it's hard to have that visibility if there will be some defaults in the market. Definitely, maybe if we prolong, that will happen. And I think as what you and the tips that you've given many of your viewers and myself is to have the recession fund that I've heard in some of your videos. And I'll plan for the next recession myself because I don't have the funds with me. But I think this is a great opportunity, definitely, to have enough capital to be able to seize opportunities in the market. And if you purchase property, I think you have to be able to understand. Number one is which property will give you the most capital appreciation. I think location is number one to look at. If you can afford it and if you can get a good bargain, then I'll always look at Makati, Bonifacio, and all these other CBDs. That's where you'll have the most in terms of upside. And second is, the nice thing also about real estate is recurring income. There's an opportunity for you to rent out space, your property's appreciating, and at the same time you're getting a return from it. So I'm going to start to save up today and plan the next recession and maybe borrow money from you so I can afford it.
Okay. So, I hope you guys got a lot from this, but please do note that whatever information that's here, you have to study it, you have to analyze it. At the end of the day, it's your money. It has to be you has to be responsible with your investment. But I hope that this gave you, I guess, enough reference note to have conviction on how you're supposed to move forward. Because at the end of the day, it's all about information and how you process that information for you to be able to make the right decisions on your investment. So thank you so much, Mikko, Barranda, Leechiu Property.
Thank you very much. Thank you very much.
And on the next video, I don't know when will it come out, but on my other channel, we have Mikko Barranda back again, but he's gonna talk about entrepreneurial journey, how he has made massive amounts of cash by working and also being an entrepreneur at the same time. So watch that on the second channel, Marvin Girma Podcast. It will all be there. But to those who watch today, thank you so much. And Mikko, thank you. And I hope this video helps you.
Salamat. Thank you, Marvin. Thank you for having me.
So trade well, trade strong, trade smart, guys. See you all again soon. Bye.